Hi guys, welcome to the honeystocks.com weekend analysis for the 6th to 9th of December 2019. Now, Christmas is almost upon us, so I know the market tends to have a seasonal effect, and what I'm going to do with you today is go through a heap of charts. As always, I know it's why you all tune in, and hopefully over the course of the next 7 days, there's some charts here for you that will help you in some way. Now, what I would also say is there are a lot of charts that I've been, my email inbox has exploded, social media, all my channels. So I've got a lot of the most requested charts of the last 7 days also. Now, before we get into this, please, as always, pause the video, make sure you're comfortable with that. Do not act upon anything whatsoever here. I know absolutely nothing. There's no investment advice, all the standard stuff. Now, what I would say is I am registered with the CMT Association, and technical analysis is what I'm known for. I'm working my way towards my chartered status at the moment, and like you'll see, technical analysis, I don't like to overcomplicate things, and you'll find that the charts are very, very straightforward to understand, with the caveat that there's quite a bit going on in the background that I don't necessarily present. So if you feel like you have been shit on this week, there are quite a few stocks that, again, like I said, you've requested this week. If you feel like Mr. Otter and you can't believe what's happening sometimes, then feel free to stick around for a couple of minutes at the end. But as always, please subscribe to our channel. If you like the video, give it a thumbs up. It all helps with the YouTube algorithms and to just get my content out there to the world, because I know that everybody loves it. So the other thing to just quickly touch on before I get into the charts is, as most of you will already know, last month I announced our new annual subscription, which is off and running. It's absolutely flying. So again, feel free to stick around for a couple of minutes at the end and I'll go over this with you. But let's get into the charts now. Where I like to really start off is just with the S&P 500. Now, for those of you that follow my work closely, you'll know that a couple of weeks ago with Thanksgiving, I highlighted the overextension in the market and what typically happens when we get above the 30-period weekly moving average. Now, I wouldn't say at the moment that the pullback that we had in some of the sectors last week would warrant the consideration of a deep pullback for the market. I think we've always seen last week was literally just a bit of tree shaking, a bit of profit taking. That is not a drop in the market, in my opinion. So I do feel like that the market, although it obviously rallied Wednesday, Thursday, Friday, I do feel like we are still overextended. However, price is going up. We've got breakouts in a lot of the major indices, the individual sectors. So it makes sense to be massively bullish on the market. I am more bullish than I have been in a long, long time. However, the caveat to that is that we can expect a bit of a pullback, at least in the short term. Now, whether that happens before Christmas, after Christmas, is anybody's guess. We don't know what Wall Street is going to do and when it's going to do it. We just have to have disciplined risk management protocols in place and just manage our trades to profit. That just seems incredibly logical to me. So let's dive into the individual stocks that I've been asked about a lot this week. So I think most of you will already know, because I highlighted it in the Thanksgiving analysis, that my guys got a trade alert for Okta a few weeks ago. Now, initially the breakout was performing incredibly well. However, we had earnings. Now, with the earnings, what you need to understand is that you need to have a disciplined rule set in place for earnings. You can probably go back through my channel and have a look for my video on earnings season. In fact, I'll probably link it to the description. And what you need to understand is that in order to hold through earnings, you do need to have a certain percentage of profit in order to hold through. Otherwise, you're essentially gambling. Now, I'm not going to get into risk-defined options plays. You know, that's a completely different kettle of fish. However, when we look at standard technical analysis and you're buying the underlying, you do definitely need to have a rule set in place. So a lot of my guys exited pre-earnings. Some of them have been stopped out of their positions down here. However, what we need to consider now with Okta is that we are flirting with a level here that, in my opinion, would be a level where I would probably want to just say, no thank you. I think we can certainly be bullish above this level. The other way to interpret this chart is that we've had a breakout followed by a retest, followed by a standard continuation. However, I would be very, very mindful now of this level here, and if we get a break below this level, that will likely induce a bit of selling pressure. So that's something to be aware of if you're out there in Okta. The other thing to just quickly touch on is with the charts that I'm presenting to you, I don't have any bias towards the stock or the charts. It's one of the things that I think a lot of you guys appreciate is that I'm very honest about the charts and I call it as I see it. So that's my view on Okta at the moment. Now, Nike, on the other hand, again, most of you will be aware that my guys got a trade alert for this at $92. Now, it's off and running now. It does look like we are potentially looking to break out, and that's obviously a good thing. However, what I would say is a lot of my guys have now tightened up stop losses to preserve a lot of that profit that's been accumulated over the last 4 weeks. I think it's had an 8 or a 9% move. If you're trading options, that's obviously been incredible. However, if you're buying the underlying, I would be mindful of technical resistance. $97, are we going to get resistance at $100? So it just kind of makes sense, I think, at the moment to just kind of reevaluate the position, block in profits and see what happens early next week with Nike. But, job well done for those of you that are out there in Nike. Match Group, very, very close to breaking out here. I do have a little bit of concern on the 200 simple moving average. I think that's a logical area to keep an eye on. I think it's a chart that, in all honesty, it's not massively appealing to me, but I have been asked about it. We are close to breaking out. We are in a bullish momentum range. I think that's one other thing to maybe touch on. So it would be interesting to see what happens with momentum, volume, etc. when or if we even get that breakout. But I think I wouldn't be buying Match until we get that technical breakout. PayPal is frustration city, I think, for a lot of you. It's a stock that's just been grinding sideways for months and months. It's not a stock that I find massively appealing at all. I think if I was going to perhaps look at it, I think that this would be the level that I would probably want to maybe consider it. But even then, does it offer risk to reward? I'm not so sure on that one. So, if you're out there in PayPal, you need to understand that you're trading in a bit of a sideways range at the moment, and a bull market is in danger of passing you by if you are continuing to hold blindly on a technical level. If you're a fundamental guy, naturally, that's a different conversation. Fundamentals aren't really my thing. I'm very much 90% technical in my approach. But I think, above 110, I think maybe PayPal may become a little bit more interesting. EHTH, eHealth, is performing incredibly well. Quite a lot of my guys have bought in down here, and certainly on the way up here also, it's performing incredibly well. I think it's very, very logical here that this just keeps on moving. We've had a little bit of a stall over the last 7 days, but that's perfectly, reasonable behavior for price. If you think about price and, a marathon, for example, you might want to just kind of pace yourself a little bit across the run. We know that with any good trend that we are always going to have these pullbacks, but, what we're doing with trend following is we're picking stocks that have more green days than red days, and that's as simple as it needs to be. So certainly eHealth, if you're out there, still bullish on the stock. Disney is frustrating a little bit. We're stalling a little bit at the $150 barrier. I think if we can get a breakout followed by strong continuation on Disney, then I think that's the catalyst for entry. At the moment, we've just not had that follow through with price. Will it happen next week? Who knows? And maybe the one thing that I maybe just would want to highlight here is we've got declining momentum there, so that's not massively positive news for Disney, so that's something to certainly be aware of. But a breakout above $150 with continuation should hopefully remove that divergence. Netflix, same old story, guys. There's one individual that asks me about this every 2 days, what it feels like. Again, it's trading in no man's land at the moment. I don't think it offers any risk to reward whatsoever. I'm all about risk to reward propositions, and I think with Netflix at the moment, I think price we're kind of just filtering in. This has the potential, guys, to just kind of chop sideways for months. This is a weekly chart for Netflix as well. That's something else to bear in mind. So we have the potential here to just grind sideways for a few more months yet. I think it becomes interesting if we get a breakout above this level or a breakdown below this level. Until that happens, guys, Netflix is off the menu, and that's just the way it is. AYX, I've had a lot of messages about this one. Obviously, with technical analysis, you're constantly reevaluating the chart, you're constantly updating the profile, and I think for me, AYX at the moment, there's a potential here for an inverse head and shoulders pattern. I think if we get a breakout above this level here, I think what we could probably say is, there's a decent amount of upside there. I mean, that's nearly 30%. So I think AYX, I think on a technical level, I think you can still be bullish. We are above $100. Obviously, we had the breakdown, and for those of you that don't know, when AYX broke down here, I was advocating this is the danger level. Lo and behold, breakdown, and we found its bottom here, but it does look like it's forming a bit of a bullish setup here. So I think with AYX, it's one to absolutely add to your watch list. Starbucks has taken a couple of weeks to get going. Again, for those of you that don't know, a trade alert went out to my guys. I think around $81. It's up at 86 now. It's obviously been chopping sideways, but it has offered a lot of opportunity on the way up. And ultimately, I do see this going back and retesting $100, which will be obviously very, very nice for my subscribers and my clients who have obviously bought in on this based on the trade alert that I sent out. So yeah, if you're out there in Starbucks, I would say congratulations if you've bought in and bought this dip. I think it was a logical dip to buy, and yeah, hopefully it goes towards 100. Trade Desk, what can I say about this one? For those crazy guys and girls out there that bought in on this dip, you're braver than I. I think that's probably the first thing to say. Yes, you've been rewarded. Would I personally have done it? Absolutely not. But in saying that, on a technical level, there was a case to be made here for buying in. Many of you have done that, so congratulations. Ultimately, I do see this going towards, it's probably going to be around 280, perhaps 280, 290 is going to be the level to kind of keep an eye on there. I've got the profit target zone anywhere in there. So, naturally, this is a stock that, you do need to have a bit of a strong stomach, I think, if you're a long-term holder of Trade Desk. It is prone to these massive swings. I think that's what we've seen last week, and naturally it's starting to perform again. So yeah, I think that's a logical area to kind of keep an eye on. Now, Twilio, I had a back and forth with one of my clients on Twilio this week, and certainly, now, the other thing to say, this is a logarithmic chart for Twilio, and this is the level that I think we need to be paying close attention to. I think if we can get a breakout there above $100 with continuation, I think there's a strong upside there of around 50%. It's a stock that I'm watching very, very closely personally, and yeah, I don't know if there's much more I can really say about Twilio. I think the chart speaks for itself at this point. We are making at the moment what looks to be a higher low, so watch this space with Twilio. Hilton made the analysis a couple of weeks ago on the breakout above $100. We're now up at 105. It's a stock that I am still bullish on. I think there's a lot of room for this still to run. I'm not a massive fan of the hotel chain, to be perfectly honest with you. But at the end of the day, the stock price is going up, and that's what interests me more than the hotel rooms. So yeah, Hilton, I think that's one that you can add to your watch list. Squid Ink, I've purposefully left this off the weekend analysis. There's many of you out there over the last 6 months that continually ask me about this one, but I've left it off for a long time because it's just not been interesting. With that said, when we look at technical analysis and we look at elements of swing trading, what we can see is it looks like we've perhaps had a loose looking breakout. I mean, I would accept that the breakout here in the chart isn't massively clean. However, what we have to accept, if we're going to observe a breakout, one of the things I like to look for are retests, just to confirm whether something's a breakout or not. And it does look like we've had a breakout followed by a bit of a retest here. Now, if that's the case, then there is a logical 25% upside if we can go back and retest the $82 level. What we just have to accept with Square at the moment, it's trading in this massive range. If you are continually trading this stock, if you're in and out of this stock, I would suggest that the stock market is passing you by a little bit, because there's not a real structure to price. It's very difficult if you're in there trying to pinpoint intraday, minute time frames, tops and bottoms. You're doing it all wrong. That's something that I've learned many times. And I think if you were to switch and just have a look at the daily chart, have a look at the weekly chart, you'll probably find that your decision making process will improve massively. EA, now we've had a breakout, not the fastest moving over the last few weeks. So this is a level, I think for me, I think above 110. So I think if you were to set an alert for this one, I think a breakout above 110 would be the level that I would say, yep, EA, you're probably going to get quite a bit of buying volume coming in, and I think 40% upside is what we'd be looking at there. Tandem Diabetes, again, asked about this a lot, trading in a sideways range, guys. The closer you get to the top of this range, the more it makes sense to just profit take and just say thanks very much. It's a rather wide range if we look at it. Yeah, I mean, so I think if you're out there and you're in Tandem, you can probably buy in at the bottom of the range and look to trade it to the top. Obviously, all bets are off if we break out to either side. I think you either buy in on a breakout or you obviously short the stock on a breakdown. But that's a rather attractive looking wide range if that's something that you like to trade. ABBV is still motoring. I'm still very bullish on this stock. Obviously, biotechs have been flying over the last few months. For those of you again that don't know, this was a chart that was discussed at length with my client group back the start of October, and it's performing very well. Again, nobody should be stopped out of this trade. let's hope we continue to the upside. Still very, very much bullish on ABBV at the moment. Western Digital. Now, to the guy that reached out to me and is in a lot of distress with this one, I totally understand. I'll never say to anybody that you've got something wrong or that you've made the bad decision, because I understand the markets can support many different stances, whether you're fundamental in your approach, maybe you're technical in your approach, maybe you're dollar cost averaging down. I understand that it's all valid. However, if you're going to ask me about, my technical view on the stock, I have to say at the moment that we are in a bit of a bearish environment for Western Digital. The simple reason for that is we're below the 200-day simple moving average. We're breaking support levels. We've had a retest. And I think if you're bearish on the stock, I think this is a level to kind of watch. Around $36, $37 would be a level that you might want to just, consider taking profits. To the other side of that, if you're out there and you are, attracted to Western Digital, it might support taking a buy position down here rather than taking buy positions here. Obviously, happy to be proven wrong on this one. If you get a breakout above this level, we know that we can get fast and aggressive moves moving in the opposite direction with failed breakouts. So I think that one would make a lot of sense. We've got Home Depot. Now, this one is causing a little bit of a headache. Now, I think at the moment we can still say we're bullish above the 200 MA. Now, the problem that we have here is that if we get a breakdown below this level, given that we've dropped below one of the Fibonacci levels, then that would be an area that I would be probably looking to just say, do you know what, I'm not going to take any chances here, let's just reallocate risk elsewhere. So the last thing you want to do as a technical trader is be caught in a position that you've had to hold for months and months in order to get back to profits. I take the view that I would rather just take a completely minimal loss and just throw my money into something else that will quickly recover that loss, and just you're just reallocating risk to the best stocks. That's just the way that I look at it. So Home Depot, bit of a headache at the moment. Still technically bullish, but giving a bit of a headache at the moment. Goldman Sachs. Now, financials are an area that financials are an area that are certainly moving now. I'm actually sharing this with you because this is a trade alert that I sent out to my guys around a month ago, and I cancelled the trade alert because we had a rejection in the XLF. Therefore, I understood that Goldman Sachs was likely to come up against a brick wall, and lo and behold, that's exactly what has happened there. We just didn't get the follow through, and price has just been chopping about for a month. If you had bought in on a premature breakout, your money's sitting there just grinding sideways for a month. Like I said before, it doesn't make a lot of sense to me when you could just throw your money into something else. But it does look like we are getting that breakout, and this is what a trade alert with my services look like. Very, very clear, and certainly, it's a bullish environment. I think financials are ready to move. So I think Goldman Sachs is an area that you might want to consider. And we also have HubSpot here. I think this is the level to watch with Hubs. I think we can be bullish above this level. I think moving below that level would probably create a bit of a headache, probably induce a bit of selling pressure. The one thing that I am noticing though, momentum is in a bearish range, which isn't great. So is it a stock that I would look to buy, or do I think there are better options out there? I think there's probably better options out there. But again, that's just my opinion, and I know absolutely nothing. So I guess, for those of you out there that have maybe enjoyed watching this, certainly you may, have your own headaches with the market. There may be a lot of stocks out there that are causing you a lot of distress. if you like this approach that I have to the market, like I said, and please forgive my Adobe creations. I am not an Adobe expert in any way, shape, or form. I've created this myself, and I'm trying to learn. So we've got an annual membership. It costs $500 annually. You get access to all our trade ideas, our scans. You get access to our premium weekend charting analysis. This social media analysis that you're watching is just simply the charts that have been requested over the last 7 days. I do have a premium weekend charting analysis. You also get access to an incredible trading community. We provide bespoke charting requests, so if you need a second opinion, we're happy to provide our charts. And we also offer referral bonuses as well. So if you see the value in an annual membership, we don't do monthly memberships. That we just attract day traders and those that are looking for get rich quick schemes, and that is not what I am about. You can go and check our website. So that's the annual membership that we're doing. And maybe just to introduce myself a little bit, if you don't know who I am. So I'm Sam, and like I said at the start, I'm registered with the CMT Association, working my way towards my charter status at the moment. And like you can probably see here, technical analysis is my thing. It's what I geek out on, and I love it. So I also run honeystocks.com trading school, but the really cool thing about what I do at honeystocks.com, and I don't know anybody else that does this, I've logged every single trade alert that I've posted to my client group and subscriber group over the last 2 years. So you can go on and you can see the types of charts, the types of stocks that I gravitate towards. And if you feel like those types of stocks are a good fit for you, then by all means feel free to kind of register your details, and maybe we can help you in some way. Like I showed you before, these are what trade alerts look like with me. I'm very, very unique about this as well. I don't know anybody else that goes in on this. I always give at least 12 hours notice for any trade alerts. I'm not a guy that has a WhatsApp chat group and I'm sending out an alert that gives you 2 minutes to act upon anything. I like to give plenty notice. I provide a chart so everybody can do their own due diligence. As you can see here with Nike, I sent this chart out at $91.29. We've got here with Starbucks, again, this one went out at $81.88. Again, it's off and running, very clear upside, risk to reward proposition. So guys, that's essentially what I do. If you are somebody out there that is struggling, maybe you're trying to fit trading around a career or a business, maybe you just don't have the time to go through thousands of charts like I do, I think we can probably help you in some way. Maybe you want to move away from day trading, maybe you want better consistency, maybe you want to learn as well. We can definitely help in some way because we've done it with many others, and I'll show you in just a second. So if you're out there and you're learning from losses and learning from YouTube, you can maybe ask yourself whether you kind of want to do it an old way, or whether you're open to learning a new way. And if you are open to learning a new way, you can just jump onto our website at honeystocks.com. You can click on join. Just need to scroll down and you can just register your details. If you would like to come in and be part of everything that we do at honeystocks.com, we have helped many people just like you. You can go on, have a look at our testimonials. Rob, I've just finished up with Rob one-on-one tuition over the last 8 weeks. Incredible trader. What we've done with him is utterly remarkable. Great guy as well. Mark, Alison, all incredible people. So yeah, guys, if you are somebody out there and you do want to learn a new way, please do go and register your details and we'll get in touch with you. But if you've stuck around to the end, don't forget to subscribe to our channel and give it a thumbs up. And from the bottom of my heart, thank you very much for watching, and maybe we'll hear from you soon. Thanks.